when I look out my window.
Hello traders, Gary Wagner with the Gold Forecast here. It is approximately 10:30 a.m. in Honolulu, Hawaii, Wednesday, the 25th day of May, and this is the Daily Report. We have gold trading quietly down about 80 cents. Currently, it's been a couple dollars higher. It's been about $4 lower in the trading session. You can see this very, very small doji candle on our daily chart is the candle we are looking at in terms of today's trading activity. We are marching higher, but we are consolidating at this point. When we take a look at the overall big picture, and we'll start with that and then kind of move in today, you can see that in many cases, as the market trades higher, it goes through a period of rapid growth and then consolidation. Rapid growth and then consolidation. Consolidation. And as you can see, it is very, very typical for the marketplace itself to consolidate before really spurting or taking off. You can see it in a couple of occasions. And typically, whereas we would look at a doji as a reversal or turning point in the market, a pivot point, what we have noticed is within the precious metals markets and especially within gold, what we do notice is that the market will consolidate before having another spurt or growth spurt to the upside. So that as I see this doji, it is not an alarming factor to me, but we do want to pay close attention. And why do I say that? Well, because the last time this market, as it moved down and then moved up, you can see that it stalled right in this area. Now, we are currently trading above this area, so that if I see on a closing basis this marketplace be able to close above, and I believe it was right around 1523, 1524, right in this area, and it's based upon these candles right in here. As long as we can stay above that, I am fairly confident that what we are looking at is a market consolidating. And as that consolidation takes place, I would expect another spurt to the upside following that consolidation. Now, the chart that we're looking at is also a daily chart. I don't pull it out that often. It's kind of my worksheet. And what I do is as we make new highs and I look for retracement points, I'm continually plotting our Fibonacci retracement on there. And so you can see that it really starts well way back here in terms of time-wise back around 2009, and I'm looking at various tops. Because what we find is as we look at these tops, it really gives us good targets or good areas for the market to potentially retrace to, and significant areas for us to position ourselves. I draw our attention to this last retracement, and that's really begins after what I call the January correction. The January correction is this move back down here. We go to our bottom, which is 1308. We take it to our top, which is 1577. And lo and behold, what you can see at that 38% level is a tremendous, tremendous band of support right at around $1,500 per ounce. I feel that that's absolutely significant. And when we take a look at the market through those eyes, in other words, when we look at the market in terms of where it did retrace to, it seems to be a very, very logical retracement point. Now, my personal sentiment is that this particular wave, wave 5, will take us to new highs. I do expect it to overtake this 1577. However, we're going to get some peaks and valleys. And determining when those are going to be, of course, the trickiest of all the components. However, for longer-term traders, the strategy is going to be to hold within those dips and at the bottom of the dips to maybe add if you're buying physical. If you're very, very short-term, you'll want to capture those movements. But I will tell you something, traders. Trying to pick the various points in which the market will retrace. In other words, these sub waves that we will probably get within the gold market, because as I said, I believe that what we're going to witness is going to be a basic 5 count. 1, 2, 3, 4, and 5, to try to capture and be aware of these different correction points is very, very difficult. What we can do is we can look at wave 1 right in here as our benchmark, and then our benchmark will tell us that this retracement should be about 38%, that wave 3 should be about 1.61 times that of wave 1, and wave 5 should be about equal to wave 1. And in that way, we use those benchmarks. We will have to see what this market wants to do. As I said, we have a very, very nice marketplace and a very nice position in play. Let's maintain it. We will talk about some strategies, as I said, in terms of scaling into the positions, adding to those positions, scaling in, scaling out, as well as trailing stops, all upcoming this week. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.
Many sights to see, and when I look in my window, so many different people to be, that it's strange